I just like to track dividends. Stock may go up and down, my portfolio value may go up and down, but that really does not matter because I don't intend to sell. The only reason I buy stocks is for the dividends. All I want to do is ensure a perpetual stream of growing dividends forever. Hey everyone, I'm back with another video about dividend growth investing. Today's video is going to cover 3 tips for success for dividend investors. The fact of the matter is that dividend growth investing takes a long amount of time. You're not going to get rich overnight, and it's going to take 5 to 10 years to start seeing meaningful results in terms of cash flow. After about that 10-year mark, when you're between 10 and 20 years, you're really going to see the snowball compounding effect go into action. And then I imagine, I haven't lived this yet, but after 20 years, you're just home free. But it's really in that first 1 to 10 years that things are the toughest because you don't see the results necessarily right away. And it takes persistence and dedication to eventually have cash flow coming in that covers your living expenses. So let's jump into these tips. Tip number 1, it's all about taking baby steps. So as a dividend growth investor, I would say one of the biggest challenges is just sticking with things, sticking with it for the test of time. And one of the things that's motivated me to stick with the strategy is just taking these baby steps. So what I like to do is I like to invest money regularly. I like dividend reinvestment plans. I also like discount brokers that have very low commissions. And even in a month where I might not have a lot of money to invest, I'll always try to invest something. And what's great about dividend investment plans, for example, is you can invest as little as $25 in some of the plans, oftentimes commission free. So even if you don't have a lot of money, to really keep your head in the game, to stick with it, to stick with this for the long term, I like to take baby steps. And you might want to try this tip out as well, just being in the game every single month, even if you don't have a lot of money, cutting that check for $25, getting it in the market, making that money work and compound for you. So that's tip number 1. Tip number 2, again, these are tips geared just towards someone in their first 1 to 10 years, really that hard period where you're trying to build up the cash flow, but it takes time, it takes dedication. Tip number 2 is an interesting one. I like to receive paper statements in the mail. So we're in this age of technology. We're in this age right now where everything has gone digital. What I don't like about the digital side of things is when statements are digital, I don't really look at the statements. So one of the things I like to do as a dividend growth investor is to receive paper statements in the mail. Even if I'm not investing a lot of money during a certain period of time, even if maybe I'm getting a little bored of the strategy, I'm getting tired of waiting, I want that cash flow, but I know I'm only in year 4 and I've got at least 6 to maybe even 11 more years before I start seeing a lot of cash flow coming in. Just receiving the paper statements is a reminder to me. It's a reminder of the progress I've made. It's a reminder of my dedication. It's something that comes in, and every time I receive a paper statement, typically, at least with the dividend reinvestment plan, you'll have a little envelope and a stub where you can mail in more money. So sometimes it entices me to take baby steps, which is tip number 1. I'm like, yeah, I got this statement in the mail. I'm gonna cut a check. I'm gonna cut another check and invest it in a high quality dividend paying stock. So as paper statements, obviously I try to conserve paper. I don't want to be wasteful, but I hold on to them. I file them. I use them for my records. I keep good records in Excel as well. And that's just something that keeps my head in the game. It keeps me focused, and it's a reminder to me when I receive these statements in the mail of my dedication, my goal, what I'm really focused on in my life. It's honestly a reminder as well not to go out and waste money, not to spend money on things I don't need. It's a reminder to take my money and keep at it, keep in the game of dividend growth investing. So tip number 3, again, for people really in those first years of dividend growth investing, really geared towards keeping people's head in the game, keeping you focused on the goal. Tip number 3 is really tracking dividends, not portfolio value. When I buy a stock, I have no intent to ever sell. And I'm serious. I have sold stocks, especially if things change at the company isn't doing well and has no sign of recovery. I made a mistake in my analysis. I made a mistake in my decisioning. That happens. I make mistakes like everyone else, so I've had to sell stocks from time to time. But most of the time when I buy stocks, I buy the stock. Oftentimes I make the right decision because I spend a lot of time analyzing stocks and sticking with big blue chip companies that have a long track record of increasing dividends. They have a defensible business strategy. Their financials are stupendous. They have a competitive moat that no one is going to break through. So I typically make good decisions. And when I make those good decisions, I just like to track dividends. Stock may go up and down, my portfolio value may go up and down, but that really does not matter because I don't intend to sell. The only reason I buy stocks is for the dividends. All I want to do is ensure a perpetual stream of growing dividends forever. I don't care to ever sell, so therefore measuring the value of the portfolio doesn't matter. And I always put money in the market that I don't need for other things. Try to keep a little bit of a cash buffer. To be honest, it's lower than I should, just because if you watch one of my previous videos, I'm not the best at budgeting, so rather than, one strategy I leverage, rather than wasting money on things I don't need, is I just get the money in the market so I don't have the money to waste. But try to keep a cash buffer, at least I'm trying to tell myself this as well, because it will keep you from having to sell stocks if you ever need money. And what's great by not having to ever sell is the portfolio value just doesn't matter. All that matters is the stream of dividends. And what I've found sometimes, if the market is turbulent, and we're at a peak in the market right now. Well, maybe not a peak, but the market's up very, very much over the last 7 years or so, or more. It just keeps going up. And what I've found, at least, is when the market's gone up a lot, it can always come back down. And so it can be discouraging for a dividend growth investor. I put in all this money and now it's worth 70% of what I put in, maybe even less than that. But it just doesn't matter if the reason you're buying is for dividends. At least that's the reason I'm buying. So I track the dividends, I watch the dividends, I like to see them grow over time. I keep a model of the dividends, and I do track my portfolio value from time to time, but not very frequently. And I found that by just focusing on the dividends, it keeps me in the game, it keeps me focused on my goals. So really, to repeat these 3 tips, I like to take baby steps, I like to receive paper statements, and I like to track the dividends. So these are just 3 tips that have helped me tremendously. I'm past my first 10 years now, and I've seen the snowball effect work. I'm starting to receive a good amount of cash flow. It needs to be a lot higher than it is now for me to achieve my dream of living off the cash flow and having the cash flow cover all of my expenses. But I've seen it play out now, and I'm at a point where things are good. Things can be better, but they're good. But at the same time, it took a lot of hard work to get here. There were a lot of times where I was doubtful. There are a lot of times where I didn't know if I would get this far. And these are 3 tips that have helped me along the way and continue to help me to this day. So this is Ian Lopuck. I'm a blogger at ppcian.com. If you enjoy this video about dividend growth investing, I invite you to please subscribe to my channel. And I invite you to please comment the video, like. I try to look at all the comments and respond to them from time to time, so please do ask questions. Also, a quick disclaimer, this is a passion of mine, dividend growth investing. I'm just sharing my passion here on YouTube. This is not financial advice. I'm not a licensed investment advisor. So if you are considering making a financial decision, please do just reach out to a licensed professional before you do so. And again, this is not advice, just sharing my passion. It's just for entertainment here on YouTube. Thank you so much for watching. I will see you in the next dividend growth investing video.